Check.
And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal. The full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts. Presented by RIA Advisors.
And good morning. Welcome to the Monday edition of The Real Investment Show. Lots of stuff to talk about over this weekend. I spent like 3.5 hours yesterday writing an article for Tuesday that's now completely worthless because of news over the weekend. So I have to go home and rewrite the whole article today. I'll just use ChatGPT to use it. So yeah. Of course, the big news is the DeepSeek, which is the Chinese AI which came out over the weekend. We're going to spend some time really kind of digging through some of the details. Now, look, this morning we'll get to this in just a second with before the bell. The markets are going to be opening sharply lower. I suggest not taking any big knee-jerk reactions. This is kind of breaking news over the weekend. Markets are trying to absorb what this means, what it doesn't mean. And again, it's all just unfolding for the most part. So we're going to go through kind of the data we've got so far, but things are going to change over the next few days. So again, just is this the watershed moment for the markets? We'll try to figure this out this morning a little bit, but I wouldn't make any big knee-jerk adjustments this morning. Other interesting news over the weekend, we had a trade war over the weekend with Colombia. It's the shortest trade war in history. President Trump sent two plane loads of illegal immigrants back to Colombia, and the Colombian government refused to allow them to enter their airspace. So Trump immediately turned around and says, okay, we're going to hit you with a 25% tariff on all your exports. And if you don't allow those people to land, it's going to 50%. And about 12 hours later, the whole trade war was over. The illegal immigrants are now back in Colombia. and we're done. So this is a good example, though. Oh, and there's no tariffs on Colombia, by the way. But this is a good example of what we talked about previously with the tariffs, is that there was a huge expectation with the markets. Interest rates were going up because this is going to be inflationary. These tariffs are going to be terrible, etc. This was all, and as we said here on the show, right, we talked about this a couple of times, it's always been the stick and the carrot with Trump, which is, I'm going to use these tariffs to basically negotiate a good deal. And this is kind of a good example of that with what happened with Colombia over the weekend. Again, very short trade war. It lasted a few minutes and it was over. And everybody's kind of gone back to being, peaceable at this moment. So we'll see. But this is the things we're going to be looking at. Tariffs on Mexico, tariffs on Canada, tariffs on China. These are all stick and carrot to get some negotiations done to try to build a better trade platform between the U.S. and these other countries. A good example over the weekend is that Trump was talking about that we need a better trade deal with China. We just need one that's fair. We don't need a great one. We don't need an excellent one. We just need a fair one that is, and this is kind of what he's aiming for with these tariffs. So again, a lot of this expectation around tariffs, has really kind of been drying up a bit. This morning yields are a good bit lower, in the market on partly on that news, but partly on this whole rotation out of risk, because this morning really across the board, it's a risk-off trade, at least for right now. And again, there's a lot of headlines running around. So this is, I want you to be really careful this morning. And again, we're going to try to get into some of the details. I got some notes from Morgan Stanley this morning, Societe Generale, a couple of other big research warehouses with their kind of the early takes on some of this stuff. Some of it's really bearish, some of it's not so bearish. Be careful just taking in headlines at this moment, because again, the initial headline is this DeepSeek changes everything. This is the pen that meets the AI bubble, and it's all over for AI. There are certainly some ramifications that will come out of this, but this is also an opportunity that could lead to some very rapid development here in the U.S. And we'll get into this because we talked about this before, that this whole AI, we talked about this last week, this AI thing, right, that's going on. This is our Sputnik moment, right? This is back to the space race of the 50s and the 60s. We'll talk about that this morning in a lot more detail as we kind of get through the show. I've got some other stuff to get into this morning as well. So we're going to spend a couple of good segments talking about DeepSeek, kind of going through these research notes. I don't have any assessment right now of what any of this means, right? We're going to kind of feel this way out this morning. But here's what you need to know before the bell. Markets are going to be off this morning sharply. We're talking about the Dow being down around 500 points. The Nasdaq's going to be down 3%. Of course, that's going to be mostly NVIDIA, Microsoft, Apple, Google. Those stocks are going to be down sharply this morning. Basically, all the AI stocks are going to be down this morning on this news. Bonds are going to be up this morning. 10-year yields are dropping pretty sharply. We're at 4.5% on the 10-year Treasury. So this is, and the S&P is going to be down about 150 points this morning. So again, these types of drops, they've occurred in the past. We've had these before. So again, it's too late to do anything at this moment. We're going to open at the lows most likely this morning. We may not go anywhere today. We may stay at these levels. We might drift a little bit lower, but the bulk of the selling is going to occur right at the open as all these algorithms try to kick in and just get positions off the books. I suggest just being a little bit cautious, not selling into that initial rip. Let this market kind of figure itself out today. I would really just go do something. I'd go fish today or do something that you like to do. Just try to take your mind off of it. Tomorrow, let's kind of sort through where we are, kind of see how the markets have responded. You go from there. Generally, these types of sell-off days are knee-jerk reactions, and they tend to bounce before you kind of get the market to sort itself out. But again, this market's going to open down pretty sharply this morning. We're going to clip out the 50 and the 20-day moving average. Now, we're going to be back down towards the 100-day moving average this morning. And we'll probably work our way back down to that support level. That's where we held important support here over the previous kind of December, early January sell-off. We had this huge rip in the markets going through the inauguration. This was really kind of part of my article for tomorrow, which is that bullish exuberance had really just returned to the markets in a very strong way. We really pushed up very sharply in the market. So again, the market was also set for some type of event to cause a corrective action. So this action today really kind of is not surprising, only from the standpoint that it just needed a catalyst because bullish exuberance had gotten very extended. We went from neutral on market allocation sentiment to extreme greed in just 2 weeks. It was a very, very sharp reversal. Most every sector and market was back into very overbought territory in that 2 week period. So again, just something to show up like this without any type of real expectation has certainly just kind of fed right into that very overbought condition of the market. You're getting a very fast knee-jerk reaction. I've got to sell. And remember, we've talked about this often with markets, is that when everybody's kind of in the trade, and this is kind of what was going on, allocations were all kind of on one side of the boat. Everybody's very excited over the last couple of weeks. All you need is somebody to say, I'm out, and everybody runs in the other direction. That's what's happening here. It's just you had a catalyst, this exogenous, unexpected event that we've talked about. We never know what's going to come, right? We never know what's going to be. This is one of those events, right? We didn't know it was coming, but here it is, and this causes these very, very sharp reversals. Now, is this the beginning of a much deeper correction? Is this the beginning of the next 20% decline in the markets? Maybe. Maybe we have to rethink this whole AI thing, right? Don't know yet. But this is certainly one of those things we at least want to pay attention to. But again, I encourage you not to just this morning just dump everything and sell stuff. Is this a buying opportunity? Don't know yet. I would just not do anything here. Let the market kind of sort itself out this morning. Let some of the emotional, computer, algorithmic driven selling, let that bypass a bit. Let the market settle down. And then we can kind of figure out what our next steps are going to be. But again, we're going to talk more about that coming up here on the show. We'll spend a few minutes here, really kind of get it. What is DeepSeek? What does it mean? And is this the changing moment of the market? So talk about that next on the Real Investment Show. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
Will you be turning 65 in 2025? Happy birthday! But there's a Medicare special enrollment period in your future. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in penalties. Make sense of Medicare's alphabet soup with RIA Advisors' online resources and one-on-one partners to help secure the healthcare insurance choice that is right for your lifestyle and budget and avoid those gaps in coverage. Click on the Insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So welcome back to the show this morning. Of course, the only thing getting blown out more than the market this morning was Michael Leibowitz, Washington Commanders, over the weekend with that 55-23 drubbing by the Eagles. So we'll certainly be teasing him about that on Thursday when he shows up. He's in mourning this morning, so don't send him any emails. So a few things to kind of really talk about. So in today's daily market commentary, we made a couple of quick notes on this. And again, all this, everybody's already making assumptions about stuff, right? It's just, this is the end of AI, the bubble's over, blah, blah, blah. There's a lot more to it than just that, right? First of all, just in the context of the market itself, a big driver of those top 10 stocks is just passive flows from ETFs. So whenever somebody buys an ETF, 40 cents of every dollar goes into those top 10 stocks, NVIDIA, Apple, Microsoft. That's not changing. So despite the fact that you've got all this news about DeepSeek out this morning, it's certainly impacting those stocks in particular, unless people start dramatically selling all their ETFs, it's going to be hard to have a massive drawdown in the overall market. So just keep that in mind. But let's just talk. So in the note this morning in our daily market commentary, again, you can go to our website, pick it up, go to Substack, at Lance Roberts on Substack. You can pick it up there as well. We publish this out every morning before the bell. So again, if you're subscribed to it, which you can subscribe to our daily commentary, we email it to your inbox at 7:30 precisely every morning, so you'll have it before the market opens. But this morning we actually kind of just made a very quick note on this. And again, I've got to go home. I'm going to write a longer article on this for tomorrow, kind of working through today's action, what it means for the markets, and then potentially what the consequences of all this are. So we'll kind of touch on that on Tuesday when we get to our technically speaking post. But, this morning we're kind of waking up. Markets are deeply red. Everybody's kind of panicking at the moment. Bond yields are surging. Bitcoin selling off. Everything's selling off, right? It's just kind of and this is the problem with the markets is that, we talked last week a little bit about having thesis, right? It's like, oh, my thesis is this. Be careful with thesis because these things are all highly correlated. And, what does DeepSeek have to do with Bitcoin, but yet Bitcoin's selling off just as sharply as the rest of the market this morning? It's just because they're all correlated assets. They're all speculative assets, and markets are all kind of chasing the same thing. So when you get some type of news like this that occurs, everybody immediately just panic sells everything, and then it's like, kind of shoot first and ask questions later. Is kind of the mantra of the markets at this point. So again, this is what I was saying earlier. Just be a little bit cautious here. So I'm just going to read to you a little bit about what I wrote this morning. Market panics are common, and it's understandable that with American exceptionalism now kind of back at the forefront, it's kind of in full force. The Mag 5 certainly is the forefront of that. Here's some interesting stats for you that were from Societe Generale this morning. Microsoft, Amazon, Google, and NVIDIA have accounted for 700 points of the S&P 500 over the last 2 years. So if you look at the total increase in the S&P 500 over the last 2 years, 700 points of that came solely from just 5 stocks. So in other words, if you take that piece of data, if you stripped out those 5 stocks, the S&P would be 12% lower right now than it is. And that ain't nothing, right? It's just they've accounted for a whole lot of this run. But that is that kind of American exceptionalism premium that was being put into the markets over the last couple of years in particular because of this AI development. ChatGPT, the future of AI, all of this, Microsoft, Amazon, Apple, Google, all these guys, Meta, all developing these big, large language models that are going to do everything for you at some point in the future. They are going to do everything from, helping advance medicine, cure cancer, do legal work. I mean, there's nothing pretty much that AI can't do outside of plumbing your house and fixing your toilet, right? And at some point, AI might be doing that as well through robots. But the point is that AI is the game changer that is going to be shaping our future. That's not changing. So what's the big deal? Well, the big deal is that what happened with DeepSeek is they did it for a lot less. Now, there's a couple of caveats with all of this, and we'll get into those this morning, but let's step back for just a moment and talk about what's going on here from a broader perspective. And then we'll kind of get some of the details as we kind of go along. Back in the 50s and 60s, and we touched on this last week, we were starting this because again, President Trump had made this comment about having a man on Mars within 2 years, which is the next time that Mars is aligned with Earth. We talked about the similarities between that in the 1950s and 60s when we were doing the space race. And remember, well, a lot of you aren't that old to remember this, but I remember sitting in front of a black and white television watching, Neil Armstrong land on the moon. And that was the space race. And it was about getting the first man on the moon. And of course, Russia launched Sputnik, got the first rocket into outer space. And we started funding massive amounts of money into getting to be the first man on the moon. That was the whole race. And from that, we had to develop and innovate all this technology. And again, a lot of the things that you use in your everyday life today, a lot of those things from computers to cell phones, microwave ovens, all came from stuff that was innovated during that space race. It was a massive leap in technology for America. And it really kind of set us up for the whole economic growth spurt that we had in the 80s and the 90s in particular. It's the same thing with AI today. And it's interesting because we're developing all this AI and it's been very expensive up to this point. And this is one of the issues with what happened over the weekend. Companies are investing billions in developing these large language models, ChatGPT, Llama with Meta, etc., Google's Bard. These large language models are kind of, think about it this way, they're kind of an expert that knows everything. So its brain is on 100% of the time. And so every time you ask ChatGPT or Llama a question, the entire AI brain is accessing all of its relevant information and giving you the answer. Now, again, these large language models can, and here's a good example of this. These large language models only have access to all of human knowledge of what's already known, right? What they haven't been able to do is solve things that we don't know yet. For instance, there's like the Riemann equation, which is this mathematical model that's never been solved, this mathematical formula. And there's these mathematical formulas that have never had a solution, but they can't solve them either. But ask them a question about, how to build an airplane, it'll tell you everything you need to know about how to build an airplane because, see, we have all that knowledge. So these large language models, they take all of this past data, basically the essence of all human knowledge that has ever been generated. They have access to that, and they can now answer your questions. And so this has been a very expensive development that we've been doing. And pretty much, for the most part, the U.S. has led that race so far. Until this weekend. And that was the interesting thing that came out of this weekend, because what DeepSeek does is that so first of all, the AI that we have is proprietary. In other words, Google owns theirs, Meta owns theirs, and you can't mess with it. DeepSeek is from China, which is open source. And it's also interesting because it's not just one brain, so to speak, it's multiple experts. So when you ask an engineering question, the engineering brain comes on and answers that question, but everything else remains asleep. If you ask a legal question, the lawyer brain comes on and answers the legal question, but the engineering brain remains asleep. So it doesn't consume as much power. It doesn't need as much in terms of support because it's only using the function of the brain that it needs to answer the question. This is a huge change to the way that we've been developing AI so far. So when we come back from the break, we'll kind of talk about the cost differences and what this potentially means for the markets. Again, don't take anything away from this conversation as fact because all this stuff is changing very rapidly. I'm just giving you what I know so far. But we'll talk about the space race in AI when we come back from the break and what that means for the markets potentially from here.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Are you a financial advisor sneaking peeks at our stuff? Instead of trying to do it all yourself, why not just join the team at RIA Advisors? Our full-service organization can provide you with the support, unparalleled research, and tools for managing your clients' money and honoring the fiduciary pledge of putting clients' best interest first. Don't take our word for it. Talk to the advisors that work with us. Want to come win with us? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors, big enough where it matters, agile enough when it counts.
If you're working and looking to retire soon, a Medicare special enrollment period is in your future. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in penalties. Make sense of Medicare's alphabet soup with RIA Advisors' online resources and one-on-one partners to help secure the healthcare insurance choice that is right for your lifestyle and budget and avoid gaps in coverage. Click on the insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
My wife got up with me this morning because we have two dogs, as you know, Gunner and Sniper. It's cold outside this morning, and so my wife lets him out on the side of the house.
The Real Investment Show podcast.
The younger one goes out, and he saw a rabbit.
Same show, your schedule.
And he takes off after this rabbit. My wife is now in furry slippers and her PJs in 25-degree weather outside, walking fast after the dogs, right? Silently whispering at them to come back. Because she can't yell, it's 4 o'clock. She'll wake up all the neighbors, right? Come back. Yeah, exactly. Anyway, so I'm in the shower. All I know is that there's now 2 dogs hiding out on the other side of the shower this morning because my wife's threatened to beat them.
At realinvestmentadvice.com.
I'm now here at the studio because I'm afraid to be at my house. The Ring video will be made available sometime soon here. I just have to download it. Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult.
There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access. Now with the new and improved Before the Bell reports, Technically Speaking Tuesday, Financial Fitness Friday, plus each day's radio shows, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So let's go through a little bit about what is DeepSeek, why is it different, and what does this kind of mean, potentially to the markets? And again, kind of going back to this idea of Sputnik. This is kind of the market Sputnik moment for AI. What does this mean for the U.S.? So first of all, let's just kind of go through some of the differentiators between ChatGPT as an example and DeepSeek. The Chinese really kind of rethought everything from the ground up, and traditional AI is like writing every number with 32 decimal places, and DeepSeek says, well, we'll just do it with 8 decimal places. Now, immediately, what should come to your mind is that it's not as accurate, and that's true. It's not. It's about 90% accurate, and the thesis is, well, that's good enough. That's good enough for most things, right? But there are certain things that I don't want 90% accurate on, like, surgery, diagnosis. I'm 90% certain you don't have cancer, right? That 10% can make a big difference. So that's one thing to think about. But for general purposes, 90% is good enough. So instead of using 32 decimal places, they're using 8 for the math, and they can derive the answer a lot more efficiently. And DeepSeek has done well, in a heads-up competition. It's answering the question, and it certainly is doing what it says it can do. Now, they also use a multi-token system, which means that basically normally the way our AI works right now is that if it's reading a sentence, it reads it one word at a time, right? The cat ran. Well, DeepSeek reads the whole phrase at one time. So instead of reading it, that makes and reading the whole phrase at once rather than one word at a time, it makes DeepSeek about 2 times faster than current AI. Again, it's only 90% as accurate by doing that, but it's faster. And as I was saying before, the real clever bit is they built these expert systems, and so you have your doctor, you have your lawyer, you have your engineer, and the only part that wakes up is the part that needs to answer the question, so that on an energy usage basis, that makes things more efficient and faster. Again, because I don't have to wake up the whole brain to answer a question about engineering. I just have to wake up one of the brains to answer the questions about engineering. So, and that's why, the traditional models use, and I'm going to read some data for you here that I've got. Traditional models, all 1.8 trillion parameters, it's kind of hard to fathom, are active all the time. With DeepSeek, only about 671 billion in total, which only has about 671 billion in total versus the 1.8 trillion parameters. But they only wake up about 37 billion at once. These numbers are staggering in terms of what's going on, but it's like having a huge team of people. They're only calling in experts as they need them. So the results are quite important. So here's some of the numbers and why this has, and this is why markets are down so sharply this morning. Because again, you think about all the money that's been spent so far on building out data centers and GPUs and all these type of things for training these large language models. Training costs for DeepSeek $100 million for traditional AI, $5 million for DeepSeek. GPUs needed, $100,000 for traditional AI, $2,000 for DeepSeek. API costs are about 95% cheaper. They can run on gaming, and here's the catch right here. DeepSeek can run on gaming GPUs versus data center hardware. Now, NVIDIA makes both of those, right? They make the gaming GPUs as well as the big data center hardware. Now, the GPUs are much cheaper, right? So if I can run this on GPUs versus Blackwell, as an example, if I can run this on an RTX 490 versus a Blackwell chip, I can save millions of dollars in cost. Now, NVIDIA still collects that revenue. They're just collecting a lot less revenue. And of course, a lot of the run-up in NVIDIA has been based on the expectations for this AI data center growth. So what's interesting about all this is first of all, DeepSeek will never come to the U.S. because it's Chinese. The U.S., from a national security standpoint, is never going to allow us to use DeepSeek because they don't, just like with TikTok, right? The whole TikTok ban, we don't want China accumulating all the data here in the U.S. And this is what was hysterical. During the whole TikTok ban, if you didn't know this, all these influencers ran out and jumped on Lemonade, which was the other kind of TikTok channel, which was entirely Chinese owned, and they just sucked in all of their information, right? I mean, like banking information and credit card information, personal information. They just willingly gave it up because they were so afraid of the TikTok ban. They all jumped on this other app. But so there's going to be a real likelihood that DeepSeek will be banned from the U.S., which gives some control right now over AI in the U.S. But it does, as I said before, this is the Sputnik moment. And there are some ramifications, particularly for private equity. You can bet your bottom dollar this morning that there are engineers all across this country waking up, going in their office super early this morning to start taking the ideas that DeepSeek generated and putting them to work and beginning to redevelop and begin to reconstitute current AI to use these ideas. So that's going to happen. Again, this is what happened during the Sputnik race, is that when Russia got Sputnik up, we immediately kicked into high gear to play catch up. That's where we are this morning. The U.S. is now in catch up mode to China. They are winning this race right now. That $500 billion Stargate initiative that was announced last week, they got the markets all excited. We're going to overshoot that by a large degree now. The amount of spend that's about to come from Microsoft, Google, Meta, etc., is going to exponentially increase to catch up, because this is not just about AI, this is also about national security. This is why I'm saying be a little bit cautious about making big assessments about today. We've got to start thinking ahead a little bit about what comes next from this. And again, there's certainly some negative ramifications that can come out of this. Absolutely. For some of these companies, right? The private equity companies that are investing heavily in startups right now, that's probably dead money. There's going to be a lot of those startup companies this morning that are dead men walking. So if you're in a private equity AI fund, you better start doing some heavy analysis of what is actually inside that fund, because a lot of those companies will never come to fruition. There's going to be a shift with private equity in terms of this. I think sooner than later, I think we'll start seeing that fall out pretty quickly. I think that's going to show up. The other side of this, though, is I think that we're about to see and it wouldn't be surprising if we don't see an announcement from the White House today, tomorrow, next week, relating to this, talking about initiatives to accelerate what's going on. And then this doesn't change some of the other underlying factors that we've been talking about here on the show relating to AI. So it's not just the Apples and Microsoft and Googles of the world doing AI. There's other aspects to this that are going to be accelerated because of this change, not degraded, and that's infrastructure. We've talked about power generation. We've talked about power transmission, cybersecurity, artificial intelligence use in the military, right? Those aren't changing. Now, the development of AI is going to change, and that's going to only accelerate from here. So one thing that you've got to just be a little bit careful about this morning is there's a lot of conspiracy theories out about all of this morning. Everybody's got an opinion. Let me tell you something. I have no idea what comes next at this point. We're going to figure that out. It's too soon to tell. This was a sea change moment for the markets. We've got to work through it, figure out who's going to win from this, who's going to lose from this. We can make some early assumptions, but you can take for all these headlines you're going to read today, bullish, bearish, etc., about 1% of it's going to be accurate because nobody knows. So most of this stuff that we're talking about this morning, I mean, other than the basic facts, I mean, we know some of the basic facts about what it costs to train DeepSeek. We know kind of how it works, etc. All that we know. Where the market goes from here and what happens with AI next is unknown. So, volatility in the markets, you bet. Is it going to sort itself out in relatively short order? Don't know. Is AI changing from being a major trend in markets? Not only just AI itself, but the infrastructure, the power generation, etc. That's not changing. Weightings of where we invest may change, right? All right, we'll come back from the break, finish this up. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
You're listening to The Real Investment Show.
And welcome back to the show this morning. So, look, we all knew this day was going to come with AI. We talked about this on the show before, is that example, and specifically at the time we were talking about NVIDIA. And NVIDIA has a very wide moat right now around their business and chip development. And as we said back then, it says at some point, don't know when, some company's going to come up, they're going to develop a better chip, a faster chip, a cheaper chip. And it's going to change the game. Same thing with AI, right? So this day was always going to come. We just didn't expect it to come over the weekend. And that's, unfortunately, the market's having to reconcile that this morning. But this also brings up a couple of other issues that we've talked about here on the show before, and this is going to be an issue as we go forward. One of the benefits that DeepSeek has over our AI is that it's open source. So you just have a lot of people contributing ideas versus engineers here in America, which are bogged down in meetings and bureaucracy, and when they want to develop something, they've got to get approval, and that approval's got to get approval from somebody else, and it's a slow process. Open source makes that very fast because you don't have you're not spending half your day in meetings trying to figure something out. You're just implementing stuff and then working with it on the fly, and you implement something and somebody comes along and makes it better. And that's the way open source works. It's very fast. It's very efficient. And that's an advantage that DeepSeek has over AI here in America. So one thing that we need to think about doing is unleashing our engineers. And just this morning, the mandate should be, I don't care what it costs. I don't care what you do. You don't need to ask permission for anything. Go do it. Build me a better AI. And I want it by 2 o'clock this afternoon, no coffee breaks. But we need to unleash jokingly, but we do need to unleash our engineers. We have very, very smart engineers, rocket scientists, physicists, you name it, all working on this from every aspect. We need to let them go. We need to unharness that technology and that talent that we have to develop this race, because we are now, make no mistake, we are in a race. Whoever winds up with AI, and I'm pretty sure that you will all agree we don't want China to be the winner of this race. That's maybe just me, my competitive nature coming out that, I think we should win the race. But we have the ability to win it. We just got to figure out how to do it. And we've got to get there, and we've got to get there quick. But this also highlights another problem that we have today that we didn't have in the 50s and the 60s. In the 1950s and 60s in particular, and really in the 70s more so, we were ranked in the top 5 countries in math, science, reading, etc. Today, we're beat out in most aspects by Estonia. And this has been really a function of the fact that we launched the Department of Education in 1980, and ever since then, our quality of education has declined rapidly. We were spending all the last 4 years graduating people from college with degrees in queer studies, etc. No joke. Those were actual degrees. Degrees in colonization, right? All these type of things. Rather than focusing on what China does, which is limits access to social media and focuses their social media on STEM. Science, technology, math, etc. We need to get back to that. We have a big gap in terms of education. Now this is going to be critical, right? We're talking about deportation of illegals and all this other stuff. we need to be focusing very hard right now on immigration of talent. Regardless that China is in the lead on this, and regardless that China has a very educated workforce in a lot of cases, they still don't want to live there. You give them the opportunity to move from communism to capitalism, they'll make that choice. So we do need to focus on immigrating more talent to make up for the gap in talent in our education system, because we're not educating our kids. There's a huge gap between our kids coming out of college and those in countries like China, India. We educate a lot of them, they go back home to those countries as well. But we need to focus on education. And this has been one aspect of the Trump administration, talking about returning education back to the states. That would probably be a good thing. Let states focus on how they want to educate their children better. But we need to go back to focusing on the things that drive economic development over time, and that is education in those areas. Engineering, math, science, technology. Because that's where we're headed. We can't deny the fact that AI is coming, and it's now coming like a freight train. Stuff that we thought was going to take several more years to develop are now talking about being here in the next year or two. The speed of development of AI and the speed of implementation of AI is going to dramatically increase because of this. Because now it's a race. It's a race that people have to win. So no longer is it a function of, oh, I've got this idea and it's going to take me 5 years to develop it. Private equity is now talking to their investments going, yeah, that idea you had, we want it deployed next week. Being a little bit facetious, but you get my point. Because they can't wait. Because if you wait, somebody else is going to beat you to that, and your investment is now worthless. And that's why I was saying a lot of these private equity investments, if you're in a private equity AI fund, I would seriously get into that fund today to figure out what those investments are. Because again, a lot of those are probably dead money now because of this. But this innovation out of China does and should be a wake-up call to the administration. It should be a wake-up call to us as parents. Because we've been asleep at the wheel for the last 15 years in terms of education. Last 4 years in particular has just been a really good example of just how out of touch with where we should be putting our efforts versus where we were putting our efforts. You know, we were running towards things that don't create economic expansion and increase broader economic participation. You know, we've talked about the wealth gap in America. 88% of the stock market is owned by 10% of households. That's not the type of equity dynamic that we want. You know, we spent the last 4 years talking about diversity, equity, inclusion. Nobody was ever talking about economic equity. And that's not giving people money, right? That's giving them the ability to participate in the system. Making sure there's opportunity available for them. Making sure they have the right education to participate in the system. And again, this is, you can't get past this one hurdle, which is capitalism is easy. You just have to participate in it, but you got to have the right skill set to participate in it. If we're not teaching our kids to have the right skill set, they can't participate in the system, so they don't get that economic benefit of capitalism. They're left outside of it because they don't have the skill set to participate. It's like showing up to a baseball game. You've never played baseball in your life. You've never even seen a baseball game in your life. You have no idea. You just see people standing around on a field with gloves on their hands and some guy throwing a ball at you 100 miles an hour while you're standing at the plate. You have no idea you're supposed to swing the bat. You've never seen the game. So how are you supposed to play the game if you've never even seen it? Or better yet, you walk into a garage and there's parts of a car all over the floor, and they say, well, if you put it together, you can have the car. Never seen a car before. Because we never taught people the basics. So they can't participate in a system that they don't understand, they don't know the rules of, and they don't have the education for. Now this is going to come very rapidly, that we're going to see that gap start to show up over the next 15, 20 years. Because there's a big education gap that's coming that way as those recent generations become more mainstream. That gap in education is going to become very relevant. Spending 5-6 hours on TikTok doesn't help that problem. Productivity is an issue. China doesn't have that issue. We have that issue. So this is going to be all hands on deck from this. And it's going to be interesting to watch how this turns out. But make no mistake, we are now back in the space race. This time it's just cyberspace race. All right, y'all have a great day. Be back here tomorrow. We'll have some more uptake on this tomorrow. Things how to sort out. We'll kind of go through what happens in the market today, and we'll kind of figure it out from there. But again, don't make any big knee-jerk reactions this morning. Again, there's going to be some stocks down big. There's going to be other stocks down not so big. Let this stuff kind of sort out. We'll cover it tomorrow. Make our decisions then. Y'all have a great day.